Hey guys, it's Rob here, the Chief Operating Officer for Bomb Money. I'm joined here by Aaron James, our founder and CEO. Today, we were keen just to jump on and talk about what's been a bit of a hot topic in the crypto and DeFi world, and that is all things regulation, and specifically some of the conversations that have been around Sam Bankman-Fried, the CEO of FTX's proposal, thinking, however you want to describe it, on regulation and how that could potentially play into the Digital Commodity Consumer Protection Act. So clearly, as a crypto and DeFi firm that are on a mission to become the largest and safest crypto staking platform in the world, making sure that we protect our investors is one of our top priorities. And therefore, it's critical that we're on the front foot with monitoring regulatory developments and considering anything that we need to be implementing to ensure that we're compliant. And also, as I say, we are keeping our investors safe and secure. So I guess just to set some context, we know it's the case that there's a real lack of clarity around regulation within the crypto and particularly the DeFi space. There has been some progress. In Europe, for example, there's been the MiCA regulations that will come into place in 2024 that actually, for the most part, are looking reasonably positive. But the hottest topic has very much been these sort of proposals from SBF. So that's what we're going to get into today. We'll share what the proposals are. We'll share what we like about them, what we don't. I guess just generally explore our thoughts on regulation as a whole and what it means for the space and what it means for Bomb Money. So Aaron, before we dive in, what are your thoughts just in general on regulation as a whole for the crypto space?
Well, I mean, I think it's really important for a couple of reasons. It's definitely important that one of our strongest or one of the things that we care most about is protecting our investors' funds, and it's just seeing all the different mishaps that have happened lately. It goes to show that it's just a little bit too easy to be a malicious actor, I guess, in the space, and I think regulations are needed to, in some form or another, to kind of combat that. It's a tough thing to implement, though, just because of just the nature of crypto and decentralization and everything being trustless. It's a really tricky one to tackle. I will say that based on all the controversy surrounding the proposal, I was expecting to have it to have a lot of things that I was not going to agree with, but that wasn't really the case after I read through it really thoroughly. So,
yeah, no, I think it's a good point, and actually, I was in a similar boat. Bitboy crypto had taken real exception to what was in there, as had a number of fairly prominent individuals in the space, and I think it's largely been those who are, real. Very, very strong proponents of decentralization in its truest form. And clearly, we are proponents of decentralization, very much so. But I think we both come at it from a fairly pragmatic point of view. We recognize that, to enable mass adoption, it is the case that there is going to be regulation and there's going to have to be some form of compromise between, the space as it is at the moment and what regulators and lawmakers, need to have to, I guess, give them comfort that consumers do have the right protections.
Yeah, maybe we should jump into what's probably the most touchy aspect of the proposal, which I'd say is like the how to kind of implement something that could either block off a bad actor or kind of how do you if somebody does something malicious, how do you prevent them from moving those funds or being able to access those funds. And so I guess first let's go over what's in the proposal. There's it's outlined a couple of different things ways that this can be implemented. The way that it's suggested is to implement like ban list or a block list. So basically everyone is allowed to do everything unless a certain particular wallet would be on a blacklist. Well, I think that's definitely a lot better than having any kind of allow list. It's something where, it's a touchy thing, right? Because it's now up to another entity whether your funds can be frozen or not, right? Like that's a lot of people's reason for going into crypto, or you hear it a lot, is that there's no entity that can just freeze my account or just turn my account off, right? But when you have blacklists on some of these huge US stable coins, and I've heard of them being used in the past for various different reasons, it's a scary thing, right? It is a little bit scary, but I mean, how else do you stop someone that just stole $500 million from cashing out? But I guess the true decentralization maxis, they just, well, again, like I'm a strong believer in code is law, right? So it's I always, any smart contract that we develop, it's always open source. Like it's always, everybody's free to read through the source code. We would never publish any kind of smart contract and not reveal the source code, because this is really the consumer's only protection. Despite the fact that 99% of users couldn't make heads or tails of it, probably 99.99 probably. You almost have to be a security audit expert in order to find certain things, right? Unless it's like an obvious malicious contract, you'd probably have to be an expert to find something that was well hidden, right? Or just a bug, right? Or just some kind of bug or security exploit. There's been severe exploits that have gone years without being discovered. Then one day somebody stumbles across it just reviewing the code, right?
No, absolutely. I mean, I think we've kind of hit on a few of the points from SBF's proposals there. So in terms of hacks, I mean, he's essentially proposing a framework for dealing with hacks, and where it is the case that there's an exploit, he rightly highlights that protecting investors' funds and making them whole should be the top priority, and goes on to talk about the fact that providing the hacker cooperates with the exchange and actively engages, plans to return the majority of funds, then they should receive, I think it's 5% of the funds, or $5 million, which I guess makes sense in some regards. I mean, it kind of formalizes some sort of standard that the larger exchanges could be working to. It encourages hackers to operate in good faith, and the reality is that if they are identifying exploits and then coming to the table and reporting it and acting in the right way, then maybe that is the right thing.
I mean, to me, it sounds like a variation of the bug bounty systems that are out there, right? Like it's although if it's up to 5% of the total amount that was stolen, that could definitely equate to a lot more money than what some of the bug bounties pay. But it sure beats an exploit draining a contract of everything and nothing being returned.
I'm just having a look at the notes. So standardized bounty, I don't think he refers to it as a bounty, but 5% or $5 million, whichever is lower. So I guess it recognizes that if you're exploiting a smaller amount of funds, then it shouldn't necessarily be the 5 million. And you hit on a couple of other points. I mean, I think the piece around block lists, etc., has been one of the more contentious points. And even I think before this sort of post from SBF had become a bit of a hot topic, because quite a large proportion of Ethereum validators have been complying with OFAC sanctions and effectively censoring blocks, where there are transactions suspected of being associated with sanctioned countries, individuals, etc. And clearly, the sort of decentralization maxis, do not support that. And I do absolutely see that argument. But I think the reality is that sanctions just have to be managed at a macro level. Unfortunately, that does mean that millions of innocent people, they're essentially cut off. I can't send someone in Iran funds, even if they are perfectly innocent and not in any way associated with financial or any other type of crime. So yeah, there are major downsides. Some would argue that Sam's proposal should have been stronger in sort of calling out the issues with the current approach to sanctions. But in my mind, that's kind of going beyond the scope of the conversation here. And we need to some extent respect what lawmakers have in place and believe to be the appropriate measures.
I think he was like, the amount of detail he went into, I think was just right, kind of outlining the problem, documenting a couple different potential solutions and, what he thinks would work the best. And, generally knowing what the different ways to tackle a problem are, I generally agree with him for the most point. But another thing, in addition to like blacklisting, I think another thing that we can bring up that I don't think it was mentioned in this article is just the ability to pause a contract. Right. So, I mean, this is another tough one, right? Because, for example, when Binance BNB chain had that issue a couple of weeks back, they just stopped the whole chain. I mean, that's beyond pausing the smart contract, but yeah, they wanted to do that before, while they figured out what was going on, and that it could have saved a lot of money, right? Them doing that. I think with smart contracts, the ability to pause in like a bridge that potentially could have an exploit, or I guess any contract is potentially exploitable, but I think again, it's a really tough one. It almost makes me think that the right solution would be to like either separate projects by like, hey, this is the Wild West, code is law. If you lose your money, you're on your own, versus, this is, whether it be on different blockchains, this blockchain is the Wild West, this one is the one that is, regulated. Or if it's like almost taking security audits to the next level, right? Where it's like some kind of regulatory body can say, hey, this contract does not have blacklist. It does not have a pause function. It is fully decentralized. And, just having those stamps of approval, almost like, a movie has a rating for, what kind of audience can view it, or, just some kind of, oversight body that would stamp it with those approvals. That's not, something that's a little bit more concrete than today's audits, I think. The audits of today seem like a cash grab, right? It's just like the bigger your name is in the audit industry, like the more cash you can get for an audit. I've seen countless CertiK projects get rugged and hacked, and doesn't really provide anything beyond what I think any other security audit firm provides, but they just have that big name on them. So
no, absolutely. I mean, and we'll get into the sort of consumer protection side of things, but the sort of point around smart contracts and the extent to which they and audits provide protection is an interesting one, because again, this is where the real strong proponents of full decentralization are very passionate in highlighting that DeFi is so much more transparent than TradFi. And is it right that those regulators and lawmakers who have guided us towards the system as we know it today will decide the future of regulation for what is ideally to be a new and better financial system? And they would say that, well, code is law, to your point earlier. There is full transparency because the majority is open source. But I think you hit the nail on the head in saying, well, one, the majority of consumers don't have the capability to understand what they're looking at. And two, even with the highest quality audits in the space, it's not uncommon to still see, unidentified vulnerabilities.
Yep.
So yeah, it's and none of this is easy to know exactly what's best, and any regulatory oversight is clearly going to be at a fairly sort of macro level, and for that reason, smaller DeFi projects, touchwood, probably aren't going to come into the firing line. But we all need to be proactively thinking about what the right thing is to help us advance the industry as a whole.
Yeah, I'm not sure exactly how to implement it, but I still I'm thinking that idea that I just had really is the winner. Just to have maybe not something that's fueled by how much money you're willing to pay, get you the nicer stamp of a security audit, but some way to just not say safe or not safe, just to have like potentially have like this project implements these security measures, or it's safe in these regards, right? Like just so that something that consumers can see and make heads or tails of, as opposed to telling a consumer to, hey, go read the code, right? Because they're not going to be able to make heads or tails of that.
Yeah.
Right.
Yeah.
So
completely.
Something that is like an audit, but a little bit where you don't have to read like a 10-page document to kind of know what's going on, just to know, hey, if I deposit here, can they pause my funds for 6 months or a year or 10 years or whatever they feel like, right? Or like, can they blacklist my wallet for no reason, right? Those are things that somebody, they should know.
Yeah. So some sort of standard requirement on what has to be disclosed around the protocol's safety.
Yeah, I mean, or even not to take it that far, maybe not to require it, but just any credible project would go through the effort of having that done. Whether, making it very accessible, right? Like it's not like a $10,000 starting price for a CertiK audit. It's something that's accessible to every project that is willing to, go through that process, or, it could be fully automated, even a lot of these things, right? Like, it's not that hard to scan code and see if there's a blacklist function, even if it's called something different, right? I mean, although then you have the open source scanner and you have guys that figure out ways to get around that. So that's actually not a perfect solution. Probably would need human eyes on it, but
yeah, totally. Well, that's it. And just on the point on humans, I think that's possibly where the sort of sweet spot from a regulation standpoint is, wherever there is a human or centralized party involved, that should be the subject of the regulatory focus, as opposed to, the code. But yeah, I think some of the things that you're describing to give consumers and regulators confidence that, they're interacting with a trustworthy protocol definitely makes sense.
Yeah, and like another thing that could be verified is like whether a project's claims are true or not. Like, for example, I was watching a YouTube video on, a bunch of influencers that, basically operated this massive rug pull, or just I don't know, whatever it was, whoever put money into it, they lost everything basically, and so there was supposed to be some kind of weight between like a whale sell wait period, or you can't sell more than a certain percent of the total supply or whatever it was, but they had actually modified that just prior to launching it. Like, one of the influencers told the dev, hey, change this for us, and he's like, I'm not supposed to. He's like, no, change it right now before you deploy it, right? So it's like, just to have something sit like that, these are the claims the project's making, are these claims all actually verified in the contract, right? Like that's something else that is not that difficult for someone that can read the code to verify, right? Just have a third party say, hey, this is what it says it is. I mean, but that would just be in terms of their claims, right? Not necessarily how safe the contract is.
Yeah. Well, no, I think it definitely sounds like it would be an advancement. So yeah, no, I like it. So given we're sort of talking about consumer protection, disclosures, etc., let's dive into what SBF had kind of highlighted on that front. So he does highlight that full transparency for investors is critical, that they should have the full information they need ahead of deciding whether to invest. And one of the points that I definitely agree with, I think, is that instruments with aspects of credit, um, should certainly have, increased rigor around them to make sure that investors truly understand what they're getting into. So leverage trading, for example. He talks about the need for education. He talks about the need for some form of knowledge assessment, which I think is a good thing because we know leverage can be dangerous.
Yeah.
We do see that on Binance, albeit we were joking about this the other day. They basically tell you what the right answers are. So I think there definitely has to be some increased rigor around that, particularly for centralized exchanges.
Yeah, I agree.
But if it was the case that we were to, or just generally regulation sort of prohibited retail investors from, investment vehicles without any, prohibit them from taking on any sort of leverage, then it is likely that people would just turn to credit cards, loans, etc. So I'm not sure you would truly be solving the problem. In some ways, it might just be more damaging for consumers who are going to go down that route.
Well, I mean, like the thing is, like, so what is going to stop someone from participating in a DeFi protocol that decides that they're going to, launch on Ethereum and just do whatever they feel like, right? Like, so who's going to actually stop that protocol, right? Like, just say, like, for example, there's, some kind of regulations in place where you have to go through a skill-based, quiz before you can use leverage, let's say.
Yeah.
But then another protocol says, you know what? We're going to let our users do it without that.
Yeah.
Right. It's like, how do you stop that?
Yeah. Well, and I'm not sure you can, right? And the focus of the Digital Commodity Consumer Protection Act is currently, more focused on centralized exchanges. And one of the things that people have been upset by is Sam has kind of brought into the mix with his, with his post, thinking
DeFi.
around
Yeah.
DeFi, yeah. But I think you're spot on. The one thing I would say is, and I'm not saying this is going to happen, but if regulators were to come out and say, DeFi protocols are within the scope for a regulation, they must do X, Y, and Z. If a consumer knows that and then sees that protocols are not complying with that, then potentially that could make them less likely to want to engage with them because they've got that sort of scammy type feel. Now it could go the opposite way, right? And I think that's entirely possible too. So yeah, but no, I'm hopeful that DeFi won't be the focus of regulation at this point. And just make sorry, yeah, you go for it.
Oh no, I was just going to go on about what the proposed solution was or the proposed regulation for DeFi. So sorry, I didn't mean to cut you off there. We can talk about that one afterwards.
Well, yeah, no, sure. I was just going to make a sort of general point, which is, and this might be an unpopular opinion, but I actually think that if the regulatory framework introduced, largely replicated Sam's proposal, I actually think we would be, as a space, would be getting off reasonably lightly. Because I think a lot of people that are strongly opposed to it do not understand the extent of regulation that exists within TradFi and other sectors. Um, mandatory disclosures, regulation around individual accountabilities, regulatory requirements around compensation for executives and material risk takers, etc. None of this, as far as I'm aware, is being talked about at the moment, and that's the tip of the iceberg. These things that I'm kind of touching on here. So yeah, I mean, traditional finance is regulated to such a large extent, and really what's been talked about here is just skimming the surface versus that.
Well, there's a lot of investments in traditional finance that unless you're what's the term they use? An established
An
investor or
accredited investor.
accredited investor. That's the
Yeah,
term. Yeah. You can't even get involved unless you meet, that criteria, which,
yeah,
I think is a certain, net worth and combined with whatever their other requirements are. But like you can't even touch certain stuff unless you meet
yeah,
those criteria. So,
yeah, yeah,
but yeah, let's jump into
absolutely.
Sam's, proposed regulation for DeFi. Um, and again, yeah, this
Sure.
definitely it could have been a lot heavier. It's basically saying that he agrees code is law.
Hmm.
Everything it's DeFi, it's decentralized finance. Um, Everything stays decentralized essentially,
Hmm.
with the exception of saying that centralized graphical interfaces or marketing is the one aspect that, what do you say, would be regulated, or just you'd have to be careful where you host that or what users you target type of thing, or it's the marketing and basically your front end website
Yeah.
that are the two things that would potentially be under focus, not the actual core
Yeah.
protocol itself.
Exactly. Exactly. Yeah. Which, as I mentioned earlier, is definitely what people are up in arms about because, as far as I understand it, the leak draft of the DCCPA doesn't currently reference DeFi at all, and there's a worry that SPF's going to put it on their radar. But yeah, what's your opinion in terms of the front end, the marketing, coming into the scope of regulation, whereas the sort of back end remaining as is?
Yes, I mean, it seems that Sam is mainly talking about US retail investors and the
Hmm.
fact of not allowing them to participate in your not allowing them to use your front end or not marketing to those users. And I think that I think that's perfectly acceptable. I mean, I think the US users know how to get around that if they choose to. And I think that for the crypto projects out there, there's ways to market and host your services that can exclude the US.
Hmm.
And I mean, if that's as deep as the regulations go, I think that's quite fair.
Yeah. Well, yeah, I get, and I agree with you. The only thing I would say is the scope of this regulation, is largely US focused, but will probably be used as a bit of a template across, the Western world.
Yeah.
Um, so so there is a danger that it sets precedent for it to, you know, end up covering other jurisdictions over time, albeit regulated under different bodies. Uh, but yeah, I think it's important that protocols are held to a high standard in terms of protecting consumers, making sure that they have sufficient information to make informed decisions. That's something that we're very focused on, regardless of what the regulation says, and something that we know a lot of DeFi protocols don't do a good job of, and hence some of the unfortunate events that we've seen in the space over the last month or so, particularly.
Here's an interesting idea.
Mm.
What if there was almost like a side chain that was just almost like a safety chain where you for example, I was looking at Polygon subnets, I think they're called.
Mm.
And by default, you nobody can deploy a smart contract on the network unless you put them like in an allow list, right? So it's like, for example, to require KYC for contract deployers, but not necessarily to use anything on the network,
Mm.
that could go a long way in, getting rid of a lot of these anonymous guys that are,
Mm.
intentionally ripping off the consumers.
Yeah,
I mean,
yeah.
it
I
goes
mean,
against a lot of what I believe in, but I mean that would be an optional choice,
yeah,
or like almost like a safer place for people to start, perhaps, right?
mm. Yeah, absolutely. Perhaps it's the case that that's not mandatory, but if you, as a protocol, want to evidence, your trust, your transparency, then that's a way to evidence that to consumers. Yeah, I
Yeah.
like that idea. Yeah. Um, cool. And then should we touch on stable coins? So stable coins, I think, have definitely come firmly onto the radar of regulators and lawmakers. I don't know. Certainly, since the Luna, and the UST collapse, and that's definitely prompted calls for strict regulation and the need to evidence that tokens that are pegged to a dollar have the true backing, either in terms of actual cash or treasury notes. And Sam kind of reiterates that. He talks about the fact that he believes there should be regular audits from stablecoin providers to evidence that there is backing. Those audits should take place on a very regular basis. And he also talks about KYC for traders participating in on and off ramping, which I have to admit, based on his text, I wasn't entirely sure what he meant by that. He seems to talk about the fact that he uses the example of buying a bagel with a stable coin and there not being a requirement for any KYC in that instance. So yeah, I'm not quite sure whether he's just talking about issuers having to be KYC'd or whether he's including, as an individual, if you're off ramping, and converting back to fiat, whether there'd be a need for KYC. I mean, that's kind of what we see at the moment anyway. But yeah, I don't know what your take on that was.
I don't have much take on the KYC aspect. Just as you said, didn't really make a ton of sense to me. But I do have some comments here, though, on the stable coins in general. I think a lot of the issues came from the fact that the word stable coin is used too loosely, right? I think coins need to be called what they are. If they're backed 1-to-1, that maybe that's what a stable coin is. Everything else is a algo coin, or it's it's not a stable coin, right? It's I just think the terminology needs to be defined a little bit better and needs to, actually, protocols need to actually stick with whatever terminology is defined to define, what these coins are and what the backing is like and how safe they are. A lot of people thought UST was bulletproof, right? And was just as good as every other stable coin out there. And, we know what happened with that. So it's, I think that's one potential solution or a piece of the solution. Just more clarity on what's actually, what the actual coin is.
Yeah, no, I think it's a good point. I mean, the Terra community, are very focused on the fact that UST was in large part a huge experiment, and believe that there is a need for an algorithmically backed stable coin. And I think there is a strong argument for continuing to progress that idea. But yeah, full transparency around what you actually own and the backing. I totally agree. I think that's critical, and there's more to be done in that space.
Yeah, I mean, like it almost reminds me of like a wrap token, right? Like it's in the most, basically like a wrap token is only supposed to be created when you've locked up that original asset, right? Like, like probably one of the first was probably wrap BTC on Ethereum, right? Like it's, it's those are only created when that Bitcoin is locked up, right? And so it's, I think a lot of people probably look at US stable coins the same way, right? And it probably should be the same way or be just as safe, right?
Yeah, no, completely agree. I'm just scanning through my notes because we've touched on the majority of SBF's proposals, albeit kind of just jumped around and done it in our own order. I think the only couple of points we've not talked about are the identification of assets that are securities and their treatment, and also the idea of tokenized equities. So let's maybe just touch on those. Again, this has been a hot topic. The SEC, said, as far as I understand, that Bitcoin is a commodity. The previous chair of the SEC had said that if Ether was not a security, albeit Gary Gensler, the current chair, seems to be hinting at going back on that. So I think the reality is, until there's clarity on that, it's difficult to know how to proceed. As a DeFi firm or or centralized exchange. I mean, Sam talks about the fact that, they have robust processes within, his firm, to identify anything that could be a potential security, evaluating against the Howey test, which we know is somewhat outdated, but the best, test that there is at the moment. So yeah, I think this is one we've just got to watch closely, as it's going to have particularly large impacts, depending on the outcome of those conversations.
Yeah, I've got to watch some of those videos about some, from some of the guys that are strong proponents to this, just to kind of see what their ammo is and how they get their points across. But
yeah, totally. And the other point Sam talks about, and he doesn't really talk about how he sees it being regulated, as far as I remember, but is the idea of the use of tokenized equities. So at the moment, we know that settlement of trades of equities is a somewhat long and painful process. It involves a whole host of parties, and he talks about the opportunity that there is, through tokenization of equities to speed up settlement and reduce, I guess, the risk associated with that. So yeah, I agree. I guess I dabbled with that on the Terra chain before it all went south, and certainly a very smooth process in being able to trade tokenized versions of some major US stocks.
Binance had that when I first signed up, and then it was quickly removed after I signed up. But you could like the top 5 or 6 like most commonly traded stocks among degens was all available there. So
yeah,
I mean,
I think
5 blue chips.
Yeah, I think I vaguely remember that actually.
Yeah.
But yeah, so we probably hit on the majority, if not all, of the points within SBF's proposal. So we can maybe wrap up. I mean, if anyone watching this has any thoughts on anything that we've talked about, anything that you noticed in his sort of thinking, then do let us know. It's totally possible that Aaron and I might have got the odd thing wrong or interpreted it slightly differently. So don't be afraid to call us out if that is the case. But the big thing is that I think SBF's proposal has done what he says that it was intended to do, which is spark conversation, spark discourse, and in my view, that is a good thing. Clearly, we'll have to wait and see what his true intentions were and the extent to which he truly can and will influence regulators and lawmakers. But yeah, I think the sooner that we have clarity around the regulatory framework, the better, because we know that there's going to be a whole load of institutional capital on the sidelines just waiting for that clarity. So if nothing else, that'll be one major benefit of having a defined framework.
Yeah, sounds like you've been listening to Kevin O'Leary. He's saying that Bitcoin is not going to go over 22K until regulations are in place, and he's talking about how much money's on the sidelines, and that is the second that regulations are in place, just like just a fraction of this money gets put to work, it's like it instantly rockets crypto like you wouldn't believe, right? Like just a small fraction of it just gets allocated there, right? So.
Yeah, interesting. No, I hadn't spotted that, but yeah, no, I definitely think that'd be the case.
He's strongly saying that Bitcoin's not going over 22K without regulations in place, and not sure how much I agree with that, but he's holding hard on that. So
right, okay, yeah, interesting. Cool, but yeah, any final thoughts from you, Aaron, before we wrap up?
I think I'll just say that we'll put a link to the article in the description for anyone that wants to read it. Suggest going through it. It's not overly long, and it's quite interesting. So
yeah,
maybe we'll do a follow-up video after see how some things transpire over the next couple of weeks. And
yeah, I think that sounds good. I mean, I've enjoyed this conversation. I mean, it's kind of just been typical of the sorts of chats that the two of us have, day to day off camera, to be honest. But yeah, let us know what you think for those that have got this far in the video. As we said a few times, for us, making sure that we protect our investors is always going to be a top priority, regardless of what regulations in place. We'll continually monitor developments in this space, and yeah, likely do some more videos in the future. But thanks again, everyone, for watching, and we'll speak to you all soon.
Thanks.